Let's kick off with Broadcom and VMware. Broadcom having a strong year with help from the AI hype, looking to close its acquisition of VMware. The proposed $61 billion deal has driven VMware's share price higher, especially after the European Commission greenlit the deal in July. The enterprise software, cloud, and AI demand are the focus for both companies into the print, and investors will be listening for updates on the deal, which Piper Sandler projects will close in October. Let's talk about that deal. Are you buying either name, Nancy?
Yeah, so Tyler, we actually acquired Broadcom after the Computer Associates deal. Everyone hated the deal. The stock sold off. We stepped in, and Hawk 10 made that deal accretive within a year. So we like the name. It's our largest holding across all of our equity strategies in our 12 best ideas portfolio. So from here, I think maybe the arb has happened. You probably, we're going to play it with Broadcom. What we're watching for is, is the company they are going to deliver the slowest level of sales since pre-pandemic. And so the question is, how slow, and are you paying for that? And I think on a relative price to sales ratio basis, the stock is pretty attractive. So we're not too worried about that. And this will be the 9th quarter, if they deliver it, that they will have had an upside surprise. So last 8 quarters.
You said Broadcom is the largest holding in your portfolio of 12 best ideas. Did I hear that correctly?
Yeah.
Okay,
yes.
Thanks. Let's move on to Lululemon. Athletica up 18% this year atop a strong holiday quarter reported in March. Wedbush saying the company's current guidance is conservative, as its higher income consumer and better inventory management should allow for more pricing strength amid a broader retail downturn. You like Lulu? Why, Nance?
We do. We bought it last fall. We like it because of the loyal customer, because they're well-heeled. So they're going to have less impact from student loan repayments restarting. And what befuddled me, and I'm going to be listening for this, is that Chinese demand is expected to be pretty strong. And we haven't heard that from a lot of consumer discretionary companies. So if they can deliver that, that's important. And then lastly, last quarter, their margins improved because shipping costs went down. We've seen other companies say that shipping costs have kind of blipped upward. And so that we don't think that's a permanent problem, we'll be watching that as well. But we own it, and a weakness we would add to it.
All right, fantastic. And lastly, we have PagerDuty, another enterprise software name, but this one having a down year after giving soft guidance last print. RBC Capital Markets saying that there's upside potential in cloud and AI, but significant downside risk if clients aren't willing to pay out for software. You're not a fan, Nancy, but you do see some potential. Where?
Yeah, well, I think they've generated solid revenue growth and free cash flow growth. The generative AI news is good because it cuts cost on their Runbook product by about 30%. What's concerning is that it's thinly traded and covered. Last quarter, they actually did get lower guidance, but they actually surprised to the upside, and the stock sold off 17%. They have exceeded estimate 100% of the time in the last 2 years, but the stock's done nothing since the IPO. I just think there's better places to be, Tyler.
All right. We began this hour, Nancy, talking about the economy, the potential for a, quote, soft landing. I'd like to get your views on that and whether you think the job market is slowing or slowing sufficiently to stay the Fed's hand.
Yes, I do think it's slowing, and I do think it may be sufficient, and that's really what you're seeing in the market. We started to see softness in the job market a couple of weeks ago, and then we also saw new hire salaries coming down. So even though the JOLTS number was still in the $8.5 million range, or 8.8, and that's still pretty strong, we think that the trend is moving in the right direction from the Fed's perspective. So I think a soft landing is still possible. Ed Yardeni has talked about a rolling recession. And if you look at his data, it's easy to be convinced that we might be just rolling through this recession and we'll come out the other side in decent shape.
What a soft landing suggests to me is a slowdown where unemployment doesn't rise much. And where GDP growth may be below trend but isn't negative. What does a soft landing feel like to you, quickly?
That, and then also that company earnings are still positive, and I think we are moving in that direction. And that margins, they've been able to manage margins. So if we can get that from Wall Street and from corporate America, then I think stocks can continue to muddle along in an upward trend. And so therefore, I think you want to be long the equity market here.